I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner, friend, colleague, associate, right hand, compadre, Mr. Nick Hodge, who's also an investor and the publisher of Daily Profit Cycle. This is the 284th episode of our weekly therapy session that we like to call Investing in Bizarro World. We're going to talk markets. We're going to talk what we're investing in. We're going to talk about baby whales, and we're going to talk Nvidia, right? All everyone's fortunes and the overall indices apparently rest on Nvidia earnings, which will be coming out live as we record this podcast. We're recording a bit early this week as we have what I think will be a historic site visit planned next week to an underexplored, never explored, newly discovered copper gold belt in one of the top producing South American countries. So before we get to all of that, Mr. Hodge, how are you, sir?
Greenfield's discoveries make stocks go up, Gerardo. That's going to be exciting. I'm doing very well. I don't know who I am. This is a busy month we've been talking about for the past couple of weeks. I was landlord, Nick, this week. I told you I'm getting out of this office. We've got some people moving in the 1st of September while we're on that trip, so I won't be here for that. If there's an echo, it's because this place is now empty. So anyway, chicken with the head cut off, but that seems to be par for the course. How are you, Gerardo?
Going into September, feeling energized, excited, enthused, really excited to get out with you and then Mr. Hicks, our audio video wizard, to go look at what I think is going to be a number of a company making projects. And look, we get to go peek before anybody really goes out there. Very few people know about this. The people that do know, most of them have not been, outside of the geologists and the people doing the IP work and the people that, are going to be contracted to drill this thing out, and the team, obviously. So, no, I mean, you know me, nothing does it for me in the markets more than early stage discovery with massive potential. And this could be another one for the book. So that's a long-winded way of saying I'm doing great. I'm excited for September. I'm ready to get to it.
Well, we're going to see if it's real. We don't want geologists falling out of helicopter situation. And, that's why we put boots on the ground because, as you know, there are fraud, scam, shenanigans. And in the mining business, it's opaque and it literally is underground. And so that's why you've got to go put the boots on the ground, do the things we do, have the network, talk to the people, and also invest in the technologies that are improving some of that opaqueness. So we got plenty to talk about in that regard and some other things you mentioned there. So happy to start wherever, including with Nvidia, because all healthy markets hinge on the earnings of one single company.
All healthy markets hinge on the fortunes and earnings of one company in one quarter, a month before the Fed pivots and starts cutting rates. How sensitive is our system if that's reality, right? I mean, Twitter is not the real world. But because I have a business Twitter, I'll get on there and just scan for news and look. And it's all about Nvidia today. And so we'll know soon enough if people are going to have a long Labor Day weekend or a really prosperous one. But my guess is it's and I am no tech person, right? And I don't even cover.
No dog in the fight. Yeah.
Zero dog in the fight, zero skin in the game. Not one where I'm putting my money where my mouth is. I literally have no dog in the fight. But Nancy Pelosi is one of the single greatest traders. That's with a D, traders, not traitors, in the history of the stock market, apparently. And she seems to think that Nvidia is going to continue having a great quarter, which has some long-term consequences and repercussions and benefits to where I do dabble in, right? The resource space. This company we're going to go visit, it's literally mountains of potentially copper and gold that's oozing out of the ground. We know there's a ton of it. We just don't know exactly how big this thing's going to be and if it's all one big massive system or, a whole belt of massive systems. So anyhow, if Nvidia has a great quarter, that means that society and its customers believe in AI and chip technology and the future of that. And that has, again, real massive implications for the copper space, for the commodity space, for data centers. All of that affects a lot of these critical metals that, again, that's my bread and butter. What I love to do is find stuff early, find stuff of massive scale, vet it, see if it's real, put some money behind it, and get out there and go make hopefully 10,000, 20,000, 30,000% gains. Not that there's anything wrong with 1,000% gains or even 100% gains, right? Good work if you can get it. But this is one of those that if it goes halfway right, could be amazing. Could be amazing. So yeah, back to my original question. How healthy is a system where like everybody's just looking at earnings of one company?
Yeah, what's interesting is that, and beautiful is that, the world is going to need the copper that you just mentioned, no matter what the bottom line number is, earnings per share wise for this quarter for Nvidia, right? Like there is an AI transition, right? There is an electrification of everything, whether those are, Nvidia chips or they're produced in Arizona by a Taiwanese company or whatever, right? So that's what I take solace in, and I was saying a bit of that last week. As far as your first question, how healthy is a system? Well, not very, and we've known this for a while, but it is the system, right? The Magnificent Seven we talked about all year driving the market higher, and that's sort of what we got to talk about now because the market is still higher, right? We're still near all-time highs on the S&P, and the question is now: are the earnings robust enough, and particularly is the forward guidance high and robust enough to sustain these lofty valuations that the tech stocks have? And I don't know the answer to that. But again, I don't have a dog in the fight. So here's my takeaway, because I don't know anything about Nvidia earnings. My takeaway is that the market's very concerned about it, right? I mean, we're recording on the day of Nvidia earnings, so I don't know what they are, but it wasn't a great day for the market. The VIX was elevated. I told you the VIX wasn't going to be totally complacent yet, that we weren't out of the carry trade thing, that we needed to wait for earnings. And so the market is very on edge, right? Like, oh, what's the Fed going to say? What's the Nvidia going to say? And, what I'm going to say is that it's not a recession. So I'm going to say I've been investing, and it's the same thing I've been telling you, so broken record. Like there's not slow enough growth to be a recession, and inflation is still relatively high. So you're not going to get like some recession crash no matter what the Nvidia earnings is or are. And other asset classes are still going to be, what's the word here? Not performing robustly, but be in a position that they don't have those lofty valuations, so they can't be sold down as hard. Let me connect the dots. We've been talking about how utilities have been soft for the past couple of weeks. Uranium has come back down to $80 or $79.
Yeah.
Copper's come down from $5. They've already priced in some of this slowing growth, but not necessarily end of the world recession, and they really don't care about Nvidia earnings, right? I mean, they might get sold down a little bit for a day if the entire market goes down hard, but they're not going to sell down in perpetuity or in duration because of Nvidia earnings. And so what I'm saying is that the economy is still going to grow. The world still needs copper and uranium regardless of these Nvidia earnings, and so I'm okay with where we're at, and that's sort of what I've been saying. At the same time, the coming rate cut is sort of fully priced in, and if you look at the market, it's also doing what we've been saying on this podcast week to week. Like I looked at my utility position today, it was up. I looked at my REIT position today, and it was up. By the way, the REIT that we bought in foundational profits in February is up over 50%. This is a multi-billion-dollar REIT, right? You say there's nothing wrong with 100%. Certainly when you're talking with multi-billion-dollar, S&P included REITs, right? And so that's what I mean. We were getting ready for this rate cut, and so the market's going to play out like it plays out. But no, to answer your question, it's not healthy for it to be. I think Nvidia was 20% of the S&P's moves on some days this week. So yeah, very, very important. And I'm looking for an answer, but I haven't got it yet.
Yeah, no, look, absolute madness. I was
it beat. So just for the record, because I know it matters, it EPS 68 cents versus expectations of 64 cents, so beat by 4 cents. Revenue of $30 billion on expectations of 28. I don't say anything about forward guidance, and I'll stop looking because it's not that important to me. But they did beat.
No, I'm curious to see where it takes the stock, because look, you mentioned the REIT being up some 50%. I think Nvidia is up some like 145 or 150% in 2024. And again, I'm just freestyling because I don't really track it. I just read it earlier when I was writing an editorial for Daily Profit Cycle, which you should go to dailyprofitcycle.com/subscribe for editorials for myself, for Mr. Hodge, and our talented group of editors and minds, including a couple of gentlemen that have been on the Nvidia train writing those profits, and subscribers have benefited from that. So anyhow, it beat. How's the stock reacting? I'm curious.
It's down 5% after market, 6%, 6.5%.
Okay.
So I don't know what the forward guidance was, but what was I going to say? Nvidia earnings. We were 20% of the S&P. Nah, I lost my train of
No,
thought.
we were talking connecting the dots, and actually, I was gonna, because my brain always goes in weird places and makes these odd connections. But I was watching a new documentary on Netflix. It's called Wyatt Earp and the Cowboy War, right? And it's a well done documentary on the famous battle at the OK Corral, right, in Tombstone, Arizona, and they were highlighting in the first couple of episodes why that war escalated the way it escalated. And, a lot of people don't connect that shootout at the OK Corral and that, historic moment with JP Morgan and Mr. Wells and Mr. Fargo, whose cargo it was that the Cowboys were robbing from, basically putting a bounty on the Cowboys and hiring Mr. Wyatt Earp and his two brothers and deputizing them to go figure out who keeps stealing our cargo, right? Who keeps stealing our cash, who keeps stealing our silver. Because at the time, we're coming off President Grant getting killed, and we are in debt from the Civil War. We have loans to our European allies, and we're backstopping those loans with silver, largely that was being mined out of Arizona. And so it's just fascinating to me how...
What do we backstop our loans now with, Gerardo?
That's where I was going. So it's fascinating to me that at one point in our country's history, not too long ago, right? This is circa 1882, 1884. Once upon a time, our allies wouldn't lend us money to get through a crisis if we didn't have something backstopping our currency, right? And so when they talk about Mr. JP Morgan and Mr. Rothschild getting together and figuring it out, essentially JP Morgan, who was asking for a loan, had to figure out how to get these Cowboys and how to stop the looting of the silver and how to stop the looting of these stagecoaches. And then that's how you end up with the Wells Fargo Bank, and that's how you end up with, some of the...
Is the stagecoach still on the logo?
Absolutely. So I just found it fascinating how quickly in our country's young history we've gone from, of course, we're not writing you a check and giving you a loan if your money's not backed by anything, to, we'll just print some more, get a rate cut, make sure the wealthy are okay, and make sure, everybody stays in their place. It's mind blowing to me, and it is a little concerning if in 100 and something years, right, 140 something years, we can deviate from such a clear path. I'm an optimist by nature, but I do have some doubts about the next 140 years. Where we'll be then, unless we reset the institutions, which is, of course, what the whole fourth turning book is about, right? It stays there. I got to get to it, by the way. So anyhow, interesting times. Let's talk about what I love doing. I love investing in the resource space. You are on to, I think, one of the most unique investment propositions and speculations with one of the most unique moats in the entire space. And I won't get into the name because you're doing a report and you're, doing a feature on this company here soon. But do you want to talk about that a bit? Because it kind of connects to, commodity supply chains and securing cargo and validating, digitizing the commodity supply chain among many supply chains that can be digitized. And nobody's figured out a way to do this except for this tiny little company that you've discovered.
Yeah, a lot there. And let me just tie it to the conversation we were just having where, you need collateral in terms of history, silver or gold to get a loan. And that went away over the course of history, the past 114 years or whatever, as you were just saying. And in the past couple of decades, certainly in the past decade, there's been the advent of cryptocurrency and Bitcoin and blockchain, which is, I would say, a counterpart to gold. It has some very similar attributes, but can be used digitally. So it has some added benefits to gold as well. And so, we've had boom and bust cycles in Bitcoin, and we've had fun with it, rug pools and meme coins and things like that. But it actually does have a very beneficial use. And at the same time, there's another revolution going on, which is the AI revolution. We just talked about Nvidia and how big it is, and that's happening no matter what Nvidia does, right? So, and it's being applied now to various industries, but of course, we're very interested in mining. Mm-hmm. And mining has a very well-known and diverse set of challenges that it's always had, and I can run through some of those. And it also has some new challenges. So forever. I mean, going back to the late 1800s when Samuel Clemens was writing about mines, and he went and visited, Nevada and the Comstock Lode, and actually worked there for a little bit, and then wrote some stuff about it. The famous saying is that a mine or a gold mine is a hole in the ground with a liar standing on top. You've heard me say that a lot because it's very apropos, given, all the things that have gone on in the mining industry since then, right? I mean, it attracts nefarious people. There's scams, there's frauds, there's liars. And that translates all the way through to modern day with the legacy of the TSXV, the Vancouver penny stocks, et cetera. And there have been well-known scams. I mentioned at the beginning of this podcast, the helicopter that lost one of its passengers. And that was during the Bre-X scandal, right? That was one of the geologists who was involved in that. And at the same time, people love it because, because of things like Bre-X, where stocks can go from pennies to hundreds of dollars, right? That's what we were just talking about, 10, 20,000% gains. That's what attracts people. That's what attracts capital. It's also what attracts fraudsters and scamsters, because it's relatively easy to be a fraudster and a scamster back to the hole in the ground, right? Because nobody can see underground, although we're getting better at it with geophysics and things like that. And you also are dealing with, very large numbers that people don't understand, exponential functions, things like that, et cetera. So there have been scams pulled off over the course of history. That's well documented. There have also been well-documented cases of fraud, not in terms of stocks and shares, but in terms of disappearing metals, right?
Sure.
I mean, you literally have cargo ships show up with, I think the number was $36 million of copper, and it's like, oh, that's painted rocks. Similar things happen with nickel, and then this translates over, and people get call options. And you remember the London Metals Exchange almost went down because of nickel trades and things recently. So those are the known problems, and then there's new problems like, hey, Mr. Miner, how much emissions are you burning to extract this nickel? Like, we want to know. This is the IRS. This is the 3-letter agency. Like, tell us how much emissions you had, because we're going to regulate that shit now. And also, like, where did all that critical metals come from? Not from child labor, right? Like, it was done with well-paid labor with benefits and stuff, right? Because otherwise you're not going to be able to get approved to sell that stuff in these green batteries, et cetera. And so it creates this huge problem on top of huge problems that have been well known for 200 years. And they're worth billions and billions of dollars. And so I think the World Economic Forum said cleaning up the mining supply chain is a $380-some billion opportunity, just mining. But it's complex because you got to put all that information somewhere. And we've talked a little bit about this before. It's a lot of pen and paper still. It's a lot of Excel. And someone's got to digitize all this. And there's companies that are working on some of this. Very real solutions, right? Not, in your grandma's closet type deal, but things that were put together by very large banks, the IBMs of the world providing computer and some of that AI power. And then, and this is the real important part, some of the largest players in the space creating critical mass, right? Because the question is always, well, a total addressable market is great, Nick. 382 billion sounds wonderful, but like, how much of that can you actually capture? And it's like, well, if you go to work and you get the world's largest copper miner on board, and you get some of the largest wire manufacturers and some of the largest metals ports and stuff, then you create inertia and that moat that you were talking about. So, that's sort of where we are. I've talked about the Monroney sticker and the battery passport. This stuff is going to be required starting in 2027 in the EU, but that's going to go out to other places as well. And so, companies need to find a solution for this, and this technology play that incorporates all the things, right? The blockchain, the AI, can provide all these solutions because it's tracking all the things. So it can say, yeah, we know where this shipment of copper is right now. We also know where it came from, what mine, what techniques were used to produce it, how much emissions. And so it creates these as a platform, and then it has these services. Do you need the ESG platform? Do you need the copper shipping platform? Do you need this one? And then you pay per service, right? And then the last thing, sorry, because I'm getting
no, this is exactly what the answer that I was looking for.
It creates a flywheel or a network effect, because once you get the world's largest copper miner, then you also get the smelters and the refiners that they use and the shippers, et cetera, et cetera. And then those people become potential customers. And so this company has gone from 20 people on the platform to over 150, I think, in the past, since 2021, has done a record revenue for like 4 quarters in a row. And I think the revenue over the past couple of years has grown over 2,000%. So this is not nothing. this isn't we're going to do this. This is the revenue's already growing by thousands of percent. And then really last thing, sorry, I already said that, is the mandates, right? So yes, the ESG stuff is mandated, the emissions, but then soon it's going to get all the way down into the contracts, right? Like, is that a clean or green copper contract, or is that a normal copper contract? And someone's got to pioneer that, right?
Yep.
Like, there was a Henry Hub, right? Like, we know the guy who pioneered the standard for grading gold coins, right? With professional coin grading service. And so there needs to be some standard for what does a green nickel contract look like, copper contract, et cetera. And so that's why a major commodity exchange has already come and literally taken a piece of this and has a deadline to buy more. So you have a natural deadline, which I like as a marketer, obviously. But by a certain date, this company has to buy more shares or their warrants expire. And there was one more thing I was going to say. Oh, last thing. Yeah, I've been saying for a while that the carbon credit space is really weird. Like, I wasn't even sure it was real because you're going to pay me not to cut my grass? Okay, like, what is that doing? And like, how are you monitoring all that? But if you can get all these mines' data on the blockchain and know all the things about them, then you can say for real, like, this mine in Chile reduced its emissions by X, and that becomes a verifiable, backable asset and something that you can really build a credit on, as opposed to, I planted 7 pine trees, let me get that shit on an exchange. You know what I mean?
Yeah.
So anyway, it validates that whole industry as well. So I'm pretty excited about it. And
No, I think it's one of the neater, most bulletproof, if you want to use that term, business models that I've seen in quite some time. And I'm really, really excited for you to get that finished up, wrapped up, and put a bow on it and get it out to the people. I think it's going to be, again, a profitable couple of years, but it's also going to be neat just to follow the growth, because it's not just commodity specific, right? It translates into many sectors, every sector essentially. So the potential market is everything that's sold and anything that's transacted on the planet legally. That's the market.
I know the market. It's $11 trillion commodity market, because I tied all those bows this morning because we have a plane to catch on Monday.
There you go. All right, let's get into the market. Speaking of the markets, let's see where we're at. Gold closed above 2,500. Silver flirted with 30, broke through 30, pulled back to 29. Thoughts on the precious metal space?
Same as last week.
Same here.
Gold's at 2,500. The rate cuts are priced in. I think, the fall is going to be exciting, because the fall is typically exciting, right? October surprises, this and that. We got volatility up a little bit. If money does come out of the tech space, gold is an easy place for it to go. And you get people getting back to their desks that are going to look at gold and say, hey, when did that happen? Let's do some reallocation here. So yeah, no, I think gold and silver, like you just said, hit the 30 handle. So those look really good.
Excellent. Copper. I know that you've been cautious with copper just because of, call it the soft landing, call it a global recession that, pinches, of course, disproportionately the lower and middle class, but now even the rich are starting to feel. Call it what you want to call it. The bottom line is copper's been, closer to 4 than 5, and then broke below 4 at one point. It looks solid to be now at 414, 415. And, there's whispers of deficits materializing a lot sooner than people anticipated. They're thinking 2025 now, not 2026 or 2027. And be absolutely clear, everybody, the reason I'm such a copper bull, the deficits that are being projected with, the current mine supply that's anticipated to come online. And I'm telling you, all of that supply is not going to make it online. And it's all only modeling the demand as it relates to, current projections. It's not, factoring in the mega growth that we're seeing in data centers and data storage and some of the other applications, the AI applications that we talked about. So I think we have a structural super cycle in the copper space that's going to last 5 to 10 years. And I think, again, companies that can make discoveries that are significant on a global scale are going to be rewarded really, really, really well. So yeah, really excited. Thoughts on copper?
I don't have anything to add. It's sort of at the same level it was last week. Stayed above 4, has already pulled back a bit. That's what I was saying when we were discussing Nvidia. It's already priced in a bit of slowing these commodities, and they're not dependent on the AI earnings. And so I'm just looking at it, $4.13 is a healthy copper price. And even if it holds there, consolidates gains, it will make another run at 5 once we digest whatever it is we need to digest this fall. So, yeah, by all means, long-term comparable.
Agreed. Speaking of this fall, we will be obviously on a site visit next week, so we will not be providing you with the weekly podcast, but we will be out doing due diligence for ourselves because we've written healthy checks to this company, subscribers because, we've been very vocal supporters of it, and future subscribers because, it's one thing to know the company name and it's one thing to know, the potential. It's another thing to know how to navigate a market and make sure that you're maximizing your gains, right? The classic, most recent story is Patriot Battery Metals. It goes from 16 cents, it goes to $17. It pulls back to $4 or $5. People think the run is over. Well, it's far from over, folks. All of the business thesis that we proposed, the end game was always put in production or get bought out. All of that is still intact. There is absolutely another big Patriot run to come that will, when it happens is when it happens, but I'm confident that we see new all-time highs, and I'm confident that, the paltry market cap it has now will be exceeded by a factor of many, many things. So what I mean to say by all that, it's important to know what you own and what you have and know where you're at in the cycle and be able to guide for that. And I think with this specific company and obviously the entire portfolio, but because this one is so unique of an opportunity, if it plays out half as good as we think it's going to play out, the guidance is going to be absolutely critical to not sell. Listen, I remember friends with Patriot Battery Metals when we took it from 16 cents to 85 cents. They were telling me, I've never made that much money that quickly. We got to pull it all out, right? Like, what are you talking about? Like, we're just getting started. Like, this is just starting to like get fun. We have a hole or two. Like, that was it at the time. I said, but that kind of mineralization with that kind of a jurisdictional moat just doesn't happen. So no, we're going to wait. And then, as you get into the 5s, 10s, 15s, 20s, you trim what you need to maintain your lifestyle. And then you keep that core position that you write out until your thesis is either changed or satisfied. And in the case of Patriot, believe you me, it either gets bought out for many billions of dollars or it goes into production and it becomes a company worth many billions of dollars. So it's a win-win there. This one has that kind of potential. Likely more if it plays out halfway as good as we think it will, because it's going to be in copper and gold, and they appear to have a fucking ton of it. And we're going to have a copper and gold bull market, a super cycle that's going to be fueling that share price rise, along with obviously the value being added by the discoveries, multiple discoveries that I believe are to be had commencing in a couple of months. So, I think by year end, we are understanding a little more clearly of the potential here. And I don't think it's a coincidence that we have one of the largest mining companies in the world agreeing with us on a lot of these points, right?
Mm-hmm. No doubt. I'm excited as well.
So no podcast, apologies in advance, but we'll make it up with when we report back after, of course, subscribers get to see the footage and the reports and everything that we're putting together as a result of that trip. Got to touch on uranium. Uranium fell below the 80 level for the first time in quite some time. It's held 80 pretty well. Technically, is there anything there that concerns you there, Nick? Again, I know the thesis mid to long term, solid as a rock, pun intended, right? But is there anything there that you look at chart wise where you go, ooh, yeah, I don't like that breakdown?
I mean, that is the level. So let me stall first and talk about gaps in charts, of which Bravo Mining has one that I've been reading about for a couple of weeks.
Just about to bring it up, and it touched it today, and I saw where it bounced, and I thought of you.
I had it actually wrong by 10 cents. I had a limit order to buy some, and I was 10 cents off. But nonetheless, it did get dang close to closing the gap if it didn't. And that was a heck of a move. That was like a 17% down day, right? So gaps in charts get filled is what I've been saying. And even last week when it broke above a certain price, I said I had to get above this level convincingly. And it went above that price intraday, didn't close above it. And I said that wasn't convincing. And less than a week later, it broke all the way down to that gap. So...
and interestingly recovered and filled, right? It broke down some 17%, ends up closing only down 7%. And I was watching it play out, and I'm like, oh, that's why I always say you're the technician amongst us, because it's just not my forte, and you do really well with it. It's much easier to lead on smarter people than you all guys than it is to just lead on yourself for everything. So yeah, gotta get the help.
So on the weekly chart, and now I've saw it enough, so I got your answer. On the daily chart, there's not really a huge gap. On the weekly chart, let me just drill all the way down. Yeah, at $78.15, there's a gap from back in November 2023 when it jumped up from that level, 78 to 15, and it gapped up, right, to $79, and that was on its way to over 100. So yeah, $78, and I'll get it exactly right. $78.20, and the spot price is currently at $78.80. So it's going to close that gap right there at 78 is what it seems like to me. And then you'll either get a consolidation at that level, or you'll get a bounce from that level. Whichever that is isn't really important to me. What's important is that $80 is sort of a new floor for the uranium price.
And again, that's consequential because a lot of the uranium equities are trading at the same market cap, at the same valuations that they were trading at when uranium was $30 and $40, right? And so there's an opportunity there, folks, if you're patient. Again, if you know what the model is, if you know what the investment thesis is, fundamentally, uranium is as strong a sector as any sector out there in the mid to long term. We gotta talk diamonds, Nick, when we're talking about big discoveries and massive discoveries and things that you don't see every day. There's a heck of a diamond discovery here recently. You want to touch on that?
So we only have time for one story, and you can pick diamonds or whales. I'm fine to talk about diamonds. That's fine with me,
no, we gotta do a baby whale. Right? I can't not talk about the baby whale. Sorry, guys, the diamond story. It's a 2492 carat diamond. You can Google it, and we'll talk about it another time. Tell me about the baby whales, man.
The biggest diamond discovered in 100 years. So we'll talk about it another time because there are some insights and takeaways. But baby whales. So, gosh, it's kind of funny, and it ties to a few things. So first, I've been reading a book. I don't have it here because I've actually been listening to it, called Thinking Fast and Slow. It's an old one. You've probably heard of it. It's a big one. It's like, I listened to 2 other books this summer, and they were like 7 hours, and this one was 21 hours. So it's
holy smokes,
fucking long ass book, right?
Long ass book.
And it's a Israeli psychologist, Nobel Prize winning, that figured out lots of things about how the brain works in different ways, like day to day, fast, and deep thinking, slow, and it relates to market psychology and how to be a good investor and second level thinking and stuff like this, and how we answer questions innately or inertly that we don't know why we're answering a certain way, and neuroscience, how our brain functions. Anyway, you get the idea. So, and then he cites numerous examples and studies. So a while ago, there was a baby whale YouTube video that was very funny. It was these Boston guys that caught a fish, and they said, it's a baby whale. But it was really an ocean sunfish. It wasn't a whale at all. But that's a good way to launch into this thing. So I saw a story the other day about this baby whale. It was in British Columbia, outside of Vancouver somewhere, that got stuck in a harbor. And people love baby whales, right? So people sprung into action to save this baby whale. Multiple agencies, wildlife agencies, local government agencies, etc., try to coax the whale out of the harbor, different techniques, etc., whatever. That doesn't really matter. Underground whale sounds, they were trying to get it to come out, all this stuff, right? And they got the whale out, and that's not the point of the story. The point of the story comes after, when they started adding up how much money they spent to get the whale out of the harbor. And it was lots and lots of money, hundreds of thousands of dollars, right? In one particular agency's case, some podunk wildlife agency in Canada, I think their annual budget was like $1 million or $2 million, and they spent 600 G's on the baby whale. And so I started thinking, and I hope some other people started thinking as well, who decides, like in the moment, how this gets allocated and where the funds go and which whales get saved, et cetera. And then there's lots to talk about there. I don't really spend a lot of time on it because, at some point, maybe someone should step up and say, and it's never popular, like,
nope,
maybe that whale should die. Anyway, there's comedy skits about this, about kids with nut allergies. But anyway.
That's a good skit, by the way.
How do you rectify that then on the back end? Like when the budget meeting comes for this agency, like, do they get more money? Like, do they have to make that up? And so anyway, moving on from the whale, then my mind started thinking about, well, last week we were talking about astronomical numbers and the $35 trillion debt and how fast things add up. And it's because we're saving every baby whale like for 600 grand, right? And we just like inflate our budgets. And then back to the original conversation we were having, is then we just print more money to cover that up, right? Because we don't have anything backing the loans, so it's inconsequential, right? Like, I mean, you have kids. Like, our daughter wants a new bike. She doesn't have to contribite, obviously, but we're gonna make her contribute so she takes care of the bike. Otherwise, she's gonna leave it out in the rain and all that shit, right? Same as if your coinage, if your loans aren't tied to something real and you can just keep printing it, you're gonna save every baby whale. So anyway, away from the whale now to the book, Thinking Fast and Slow, and some of those examples. They too were talking about animals and how different systems get out of whack. So one of the examples is there's like some bird that's endangered. And if you harm this bird or its environment, you get there's a $25,000 penalty. And then they were talking about the penalties and fines for fatal industrial accidents for humans. And the penalties are less than they are for the bird. Right. And there's many different reasons for that. It's because the bird people didn't make the human laws. The human people didn't make the bird laws. They didn't talk to each other while they were making them. The incentives get out of whack. Birds are cute, etc. Lobbies are powerful, all that sort of stuff, right? But when you stop and think of it for a second, it's like, wait, you can kill a person in a meatpacking plant for $7,000 and you can't move a bird nest for $25,000? It's like incentives are out of whack there. And so that's my baby whale story, but it has to do with second level thinking and, stuff that we don't understand quite yet about psychology and how systems work. And so I'm not sure what my ultimate takeaway is there, except I've been trying to be more cognizant and rational and observant about things like that, especially as we all get so clickbaity and jarry and just react to the headline and the Nvidia earnings. Right. I'm trying to step back and say, wait, what does that really mean? What are the real implications of that? Like, what is the perspective? We've been talking about context, right? So anyway, that's why I bring that up, because I was reading about this baby whale, and normally I would be like, oh, fuck, did they get the baby whale? But now I was like, it costs how much to save the fucking baby whale? So anyway.
Well, and then, my brain, again, because it's just weird sometimes, it goes to, okay, well, if that one agency spent $600,000 of $1 million budget, what is it that's not going to get done in lieu of the $600,000? So does that mean, stray cats or stray dogs have to die now because we don't have the money allocated to provide shelter, provide, safety? Does it mean that, other rare species go to extinction because of this one whale? I mean, again, I completely get your point about, stepping back and looking at the forest sometimes and not checking out every branch and every tree, because it's really easy to get lost in the fact that you're within a whole system that is a lot more than just the tree, right?
Mm-hmm. Yeah, I don't know if the cats are going to get spayed and neutered. I don't know if Bob Barker would be upset about that. There's things that I don't know. But what I think when you say that is it harbingers back to the disingenuousness of budgets and how these agencies and governments, basically institutions, they tell you one thing and they put forward a plan and then they just deviate from it, right? And what we're saying is we don't know what the accountability is. We don't know what the repercussions of that are because they haven't essentially come yet. And for one, and for me, it relates back to some of that funny money, right? It's because it can get paper overed so easily.
Yeah. No, it's interesting. I'll close out with one little anecdotal comment. There's a headline today in my local news app where the city council wants to propose waiting until after Labor Day to begin school so that we can conserve energy and save money on the energy bill. And I'm looking at Texas and its great wealth and its great resources. And I'm sitting here reading this headline and a part of me gets really pissed off, Nick, because I'm sitting here going, you want to delay education for kids at a time where critical thinking seems to be dipping downward, because you can't budget enough to have an extra couple of weeks worth of high electricity bills. Like, what are we doing, folks? Where are our priorities? Like, how are we looking at that as the solution instead of the million other things that we should be doing, like fucking sticking to a budget and doing it right in the first place, right?
Right.
And so, again, the conversations that we end up having as a result of the lack of planning and budgeting and critical thinking and not having the context in advance is why we end up, unfortunately, societally, politically, economically, in some of the dire situations that some of us end up in. And so Yeah,
That's a great example. No, that's a great example of
Yeah.
moving around the ones and zeros to try to make stuff work, and
Yeah.
papering it over, but not solving the ultimate problem.
Yeah, at the
No, it's a great
expense of the
example.
education of the kids. So anyhow, macro take, right? Gold positive, silver positive, copper positive, uranium positive. Maybe not every day. Nothing goes straight up. The equities are an absolute bargain across the board there. Don't get distracted by the Nvidia things. There's many things to be looking at. A lot of moving parts. A part of what we do, folks, obviously, is not just go visit projects and meet with management teams and geologists and go bet these things, but conference season is here. And so I'm really excited to meet with a lot of you in person. We will be at the Beaver Creek Precious Metals Summit here within the next couple of weeks. We will also be at the New Orleans Investment Conference, 50th anniversary of that incredible conference put on by Mr. Brian London and his very, very talented and amazing staff. So if any of you are out there, send us a note, say hello. If you see us, bump into us. Happy to catch up and chat in person and meet everybody out there.
I echo all those sentiments. Yes, sir.
I like it. That's all we got for this week, folks. I am Gerardo Del Real, along with my business partner, colleague, friend, Mr. Nick Hodge. This was the 284th episode of our weekly therapy session that we call Investing in Bizarro World. We didn't even talk politics this time, folks. Y'all have yourself a great, great September. We'll see y'all in 2 weeks.
See ya.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.